He raised his gold and silver rating last week. What's in store today? We have Jim Wyckoff joining us now. Jim, good to see you.
Hello, Danielle. Always nice to be with you, and always nice to get in contact again with the Kitco listeners.
All right, Jim, before we get into gold, the dollar, and all that other good stuff, the market here seems to still be digesting Fed Chair Janet Yellen's comments from last Friday, where she hinted towards a gradual rate hike, correct?
Right, Danielle. Yellen's speech, I believe, was on the West Coast Friday afternoon, is still being talked about here on Tuesday morning. She leaned a bit toward the hawkish side on monetary policy, and that might have been a bit surprising to the marketplace. I would say that's been a bearish underlying factor for the raw commodity sector here early this week. Not a major bearish situation, but as you said, this speech she's giving on Thursday is going to be extra important given that slightly hawkish tone she gave last Friday.
All right, Jim, let's look at the U.S. dollar now. On track for its strongest quarter since 2008. As a result, gold is modestly steady, holding below 1,200. How do you see that dollar-gold play here?
Daniela, as we've seen early this week, the gold market remains closely anchored to the U.S. dollar index. And we've seen the dollar index post a really significant rally this week from last week's selling pressure, and that put downside price pressure on the gold market. I do want to point out a couple things to gold market traders that might be a bit encouraging, especially to the bulls. The U.S. dollar index last week sold off to the point that it did begin to suggest that index may have put in a near-term market top. If that is the case, that would be a bullish factor for the gold market since those two have been so closely related in an inverse relationship. The other thing I want to point out is there are also some early technical signals in the U.S. stock indexes. We've got potential bearish double top reversal patterns in both the S&P 500 index and the NASDAQ index that also hint those indexes have put in at least near-term market tops, if not major market tops. If that is the case, and those are still early technical indicators, but if that is the case, that would also be a bullish factor for the precious metals markets because of the flow of asset money out of the stock market into competing assets, including raw commodities and the precious metals.
And those are some important technical clues to be watching for when looking at the dollar, Jen. Let's focus in on gold now. It's been very data sensitive as of late, and this week might be a shorter trading week, but it's an important one. We have jobs numbers coming out on Friday. Could we see a bounce here?
Yeah, the jobs report on Friday. Now, the markets are closed on Friday, but I believe the cash market still will be trading. And I'm not sure the futures market may trade up until the electronic market overnight may trade up until just before or just after that jobs report. So that's going to be extra important to see how the prices react. But more than likely with the Good Friday holiday, you're going to see a delayed reaction Monday, especially in the U.S., regarding the job report on Friday. And indeed, it's going to be extra important because the Fed, as we saw with Yellen's speech last Friday, the Fed seems to be sitting on the fence on the timing of its next interest rate rise. And if we get an extra strong or an extra weak jobs report on Friday, that could tip their hand.
Well, on that note, let's get to your Wyckoff market rating for gold and silver this week.
Daniela, for June COMEX gold, we backed down a little bit from last week with the selling pressure we've seen. I'm giving gold a 2.5 Wyckoff market rating. That's firmly in the bearish camp. Overhead technical resistance at 1,200, solid technical support at 1165. Looking at May COMEX silver futures, we've also backed down a little bit from last week. Last week we were kind of neutral on an overall technical basis, and I'm giving it a Wyckoff market rating of 4. We've got solid overhead resistance at 17. Solid support at 16.
Thanks so much, Jim. We'll see you next week.
Thank you, Daniela. Always nice to see you. Take care.
And thanks for watching this edition of Technically Speaking with Jim Wyckoff. We'll see you tomorrow.